Alright, I'm back to my usual setup, and it is, what is it? Yeah, my second video of the day. Hey, you know what happened on Wednesday? Let me talk about Wednesday again when the market was down 800 points. I was out walking my dog and I felt my phone ringing in my pocket, and I took out the phone and it said Fox 5, my local Fox news station here, television station here in New York City. Now, I used to be a regular guest, and the funny thing is, well, they probably haven't called me in like 5 years, but every time they call me in the past, it has been in some kind of a market meltdown, every single time. So I kind of laughed to myself because that was the day we were down 800 points. I took that phone out of my pocket and I said, Fox 5, they're calling. It's the Fox 5 contrary indicator. So they asked me to come on the next morning. That was yesterday morning. I went on. I said, look, this is what the stock market does. I mean, if you've been following the stock market for any length of time, you know that from time to time it has these bouts of hysteria. People get crazy and they sell, and this has all been driven by headlines. Well, I would say most of it has been driven by headlines, and everybody panics. And if history shows us anything, it's that you got to buy during these periods. Now, when I used to work on Wall Street, I had an indicator called the news truck indicator. I worked right on Wall Street. And every time there was a big market sell-off, I mean, the TV news trucks would be lining Wall Street, up and down Wall Street, along Broadway. And I used to tell the younger brokers and traders, hey, whenever you see that, you buy. All right? So it's funny because I got that call from Fox, and I told them when I went on the air, I said, you guys only call me when everything's in a meltdown. And I say the same thing every time. I tell people those are opportune moments to get into the market. And actually, if you think about it, for ordinary investors, if you just tweak your approach to, I guess, investing a little bit more, like if you have one of these monthly investment accounts that just a certain amount of money goes into the market, maybe doing index funds or whatever every single month, if you just get a little bit more aggressive during times when the market is down, like maybe going 20% higher into the market, your allocation than you normally do, maybe 50% if you can afford it, your results will be amazing. Amazing. Most people don't do that. And I've spoken many times about how it's kind of funny when you think about it, because American consumers are the most savvy consumers on earth. We literally created the whole phenomenon of discounting and discount shopping, right? I mean, think about the holidays, the end of the year holidays, Christmas. Nobody goes shopping until everything is on sale. But when it comes to investing, everybody does the exact opposite. They like to buy when prices get very expensive, and they like to sell when prices get very cheap. Now you got to turn that behavior around. That's why people don't make any money in the stock market. Now, for a lot of people, it's really, really scary when the market goes down, and they find it hard to do that. But you have to fight against that. Maybe it's a natural instinct. If it's an instinct, it's coming from the primitive part of your brain, that fight or flight part of your brain, the limbic system. You got to use the frontal cortex. That is the evolved part of your brain. That's the part of your brain, logic and thinking. You have to suppress the limbic system. All right, let's talk. Oh yeah, here's what I want to talk about. So everybody is predicting a recession, even central banks, central bankers, based on this collapse in bond yields. And again, I think I'm the only one, actually I should qualify that, because I do have a friend, a very, very smart friend. He and I have been saying this now for a while. But it is kind of amazing to me that nobody else out there on Wall Street, among the analyst community, market observers, nobody in the media Literally nobody has made the connection between what has happened as a result of the debt ceiling. Now we know the debt ceiling has been suspended. That happened late July, July 24th, July 25th, something like that. So the resumption of Treasury sales has begun, all right? But you had a period, a 4-month period from March to July where there were no new Treasury sales. And I don't want to go over this again because I know probably most of you are getting sick of hearing it, but I'm just fascinated that nobody has made the connection. But that's good. I'm happy. Now, maybe I'm wrong, and maybe this is some new paradigm that we're in. Maybe this is the new orthodoxy of central banks, that everybody's just going to put their rates at 0 or negative, and that would make me wrong. And that is a possibility. I mean, they all do the same thing. They're all sheep. And I said a long time ago, I kind of ruminated that, you know what? We may be heading for the full Japan, I called it, where everybody becomes like Japan with the negative rates and endless asset purchases. And by the way, that bankrupts your banks because you're dumping trillions upon trillions of reserves onto these banks. And, that factors into their leverage ratios. They got to raise more capital. They can't lend as much, so their earnings go down. It is a disaster for the banks. And it's, again, the Einstein definition of insanity that all these guys keep doing. And when I say I'm talking about the central bankers, they all keep doing the same thing and expecting a different result each time. So maybe we're in that paradigm. I thought it wouldn't happen. I thought the orthodoxy, the orthodoxy has been forever that they believe that rates need to be positive and highly positive. Maybe that's all changing. I don't know. But anyway, nobody has made that connection other than myself and my really smart friend. Now, as far as the recession forecast is concerned, or the recession prediction, look at the other day. We had very, very strong retail sales in July. All right? Unemployment is still very low. We had a strong payroll number in the last report in July. And the list goes on. I mean, the gasoline I saw in the EIA report that we had on Wednesday, and by the way, I sent out my analysis of that as I do every week. That was a record for a single week of gasoline demand. Now, supposedly, if we're going into a recession, or if we are in a recession, as some people claim, I find it hard to believe that you'd be seeing surging retail sales, surging gasoline demand, and all that other stuff. Loan creation, right? I talked about that. Bank credit rising at the fastest pace in 30 months. Real estate loans, all that stuff. I've been through it. So, I mean, look, I'll either be proven right or I'll be proven wrong. You got to admit, my theory is quite different than everything else out there, where there's just a universal view that, hey, inverted yield curves and bond yields predicting recession, done deal, just wait for it because it's coming. I don't know. I call BS on that. But you know what I said? If I'm wrong, I take all the criticism you could throw at me. Anyway, that's it for today. I'm going to start my Friday afternoon. Everybody, have a great weekend, and I'll see you on Monday. Bye-bye. By the way, if you want to sign up over the weekend for my report, go to pitbulleconomics.com. Sign up. Oh, zombie trading. I sent out a very interesting currency bet to subscribers there. If you want to get a 30-day free trial on that, go again to my website, pitbulleconomics.com. Sign up for a 30-day free trial of zombie trading. And why don't you sign up for MMT Trader at the same time? You get a special deal on zombie trading if you take both of them. All right, everybody, have a great weekend. Bye-bye.